Time here, and I'll just quickly present the next speaker, Professor Mário Amorim, which is an assistant professor at the University of Porto and a senior researcher at Tech, and a board member of the New Economy think tank, and a co-founder himself of Desk Capital, which is great to see also founders on this side. And we'll speak on smart contracts, but this time from a non-legal perspective.
Okay, thank you so much for the introduction. Two preliminary notes. The first one is to thank the organization for the very nice invitation, for being here today. The second is just to mention, well, something you can observe by yourselves. I'm not wearing a tie, so you can safely conclude that I do not hold a degree in law, and therefore I'd like to apologize in advance in case I say something technically wrong from a legal perspective. The point of this presentation is to be a little bit more technical, less legal, but still I may touch upon some points that may have some legal implications, and therefore if I say something wrong, please so I apologize for that in advance. Okay, so when we want to discuss what smart contracts are and what smart contracts are for, I think it's interesting to go a little bit back in history, back to 2008, and take a look at the first block that was part of the Bitcoin, what we call the Genesis block. And when we take a look at that particular block, you see a lot of numbers, a lot of bits and bytes, but there's one interesting aspect on the right side, so the third column to your right. You can see a lot of strange characters, but there's also a title from the Times, dated from January the 3rd, 2009, saying Chancellor on brink of second bailout for banks. And the reason why this title is here is not by chance. It was deliberate. So Satoshi Tomi, or whoever the group behind the Bitcoin were or are, we don't know, there's a theory that they may have been deceased by now, they deliberately put this title here. And the reason why was because there had been, at that particular time, a general distrust in the legacy financial system. So we discuss a lot what kind of regulations we need to bring to the table for these new forms of money, for these new digital crypto assets, but we can't forget that the legacy financial system also has quite some problems to face. And so when Lehman Brothers was basically going bankrupt, and many other banks, some people were on the streets while others were actually busy coding and coding Bitcoin. And Bitcoin was the first use case of the blockchain, was actually the first way of making a very, very simple contract. And it was a combination. It is an integration of technologies that exists since 30 years ago. So in computer science, all the technologies that are integrated into the blockchain have been well known, well studied. Now, what brought an innovation was actually bundling in the same technology, which is now called blockchain, that paved the way for smart contracts. Now, was it justified, this general distrust that we saw in the financial system? Well, if we go back 20 years, and it's interesting to go back 20 years because we had another technological bubble, which was then called the dot-com bubble. For those who remember, there was a company that sold dog food online. They changed the name, they included .com in the name, and basically their valuation skyrocketed, and they started valuing on the hundreds of millions of dollars. So this happened back in the 2000s. And in the aftermath, it was kind of decided, there was like an economic consensus, including from Nobel Prize winners such as Paul Krugman, that the response would be to stimulate demand, right? The typical Keynesian response would be to stimulate demand, and in fact, create a bubble. He actually stated this. He said that Alan Greenspan, then the Federal Reserve chairman, should propel a bubble in the housing bubble. So that actually happened, and prices started going up. It was not only a monetary decision, it was actually the government was very much focused in fulfilling what is one of the American dreams, which is for everybody to own their own home. So also from a governmental perspective, there were some policies enacted towards achieving that dream, and some companies such as, well, they're private, but they're like publicly owned companies, Fannie Mae and Freddie Mac, were basically helping out, providing loans, mortgages to a lot of people, including those, what we call the subprime, that eventually could not pay those mortgages in the future. At that time, Henry Paulson, then the chairman, the Secretary of the Treasury, he was basically saying that the housing market was at the bottom. But when we look at the data, the home price index was at historical records. So it's it's hard to understand why he could have said this, because he had access to the same data we have today. But he was claiming that there was nothing wrong going on. By the way, we should have wondered whether right now the time is different, because when we look at what the central banks did, it's very much alike to what is going on right now. But the point here is that this general distrust kind of propelled or motivated the creation of the Bitcoin. And the reason why I'm talking and discussing the Bitcoin is because the Bitcoin was the first contract, not smart, but it was the first contract to be established in this new digital era of digital money. And that contract contained a very simple thing, a transaction. It was like the simplest of the contracts, right? And contained a transaction saying that a given amount of Bitcoins would be transferred to a given account. And so that the first contract allowing for digital money was created. But then one has to wonder if this is possible. Can we go further? Can we do more than this? Can we actually include code in this blockchain? So instead of, or besides including transactions, can we also include scripts that execute code? Yes, and that's how the smart contracts came to be. So they're basically an extension of the original blockchain, where instead of transactions, or besides transactions, we also include scripts, code that may execute some orders. Very similar to what happens in traditional legal contracts, where we have a lot of lines, and there's like an if and else logic to it. So it's very similar to what lawyers see as legal contracts. Now, it's actually interesting, because the idea of a smart contract goes way back the Bitcoin. We have to go back to '96 to Nick Szabo, who wrote an article saying that the smart contracts, he didn't have the technology for implementing them. So this was more a conceptual thing, but it paved the way for what then came to be the smart contract. And then, by then, he was basically saying that these smart contracts would be like the digital versions of the contracts we have today for supporting all the transactions that we establish in our modern societies. And he was basically saying that we could move these contracts to the digital era, and this would actually allow for a lot of different use cases that today they're doable, but they come with huge transactional costs, and sometimes they're so big that they may remove all economic value from the transaction. He also said that no artificial intelligence was involved, and that's a fact. The smart contracts do not come with any kind of artificial intelligence. They just follow the rules and if-else logic as its basis. And it's funny, because he gave an example of a smart contracts that he wrote this in '96, right? So let me just remind you of that. And he came up with a very interesting idea of when someone wants to purchase a car. Imagine doing a leasing, and he purchased a car, he's still paying for the car, and for whatever reason he stops paying. So that becomes kind of a non-performing loan. Now, in what we have nowadays is that you have to find someone to go after that person, collect the car, or make sure that the person continues paying, right? If you could somehow encompass all this in a smart contract, the car would stop working immediately. So the time you fail your payments, the car would not work anymore, because it would check that the payment has not been done, and therefore it would be rendered useless. And so this is the kind of thing that we can do nowadays. We have mechanisms, but they take a lot of time, they are expensive, they require a lot of people, and the smart contract allows us to somehow automatize and also remove a lot of intermediaries from this process. Now, it's interesting to see what makes the blockchain unique, because we already had decentralized systems. That's not new at all. What we didn't have were what we call the distributed ledgers, where the system is decentralized. It doesn't depend on a central authority that we have to trust, but still all the nodes connect to each other, right? And so it's way more robust in case one of the nodes fails or tries to trick the system. The system will continue working, and that's a very important property of the blockchain and of having smart contracts we can rely on. And so that allows the blockchain and the smart contracts to be trustless. That has been discussed before. We don't have to trust the participants. Decentralized, peer-to-peer, consensus-based, virtually immutable in the sense that it's really hard to change the data. It's possible, but it's extremely hard, and you cannot do it without attracting attention, so everyone would know what's going on. It allows for the smart contracts, and of course, when we discuss smart contracts, one may say, well, but lately they've been used to do some really, well, pardon my French, stupid stuff, such as the CryptoKitties in 2017 that turned into huge valuations, or the most recent Bored Apes using NFTs that have been sold for millions of dollars in some cases. Now some of them are worth a couple of $100s. And so one may say that this technology, well, it's useful, but well, the use cases that we've been seeing lately aren't exactly the demonstration that this provides social value. Well, just some food for thought. Let me show you one piece of art, of contemporary art, that is exposed in the Tata Modern Museum in San Francisco. And I challenge you to say whether there's more art to it than the previous Bored Ape. This is just a blank frame. Anyway, some food for thought. But the point here is that these new forms, these new smart contracts, through them, we were able to introduce some interesting use cases and some business cases. So one of the things that I think that all of us, but especially people from the legal industry, should consider is whether one of the skills that eventually people will have to develop is coding smart contracts, right? So instead of writing those 100-page Word documents filled with legal agreements, now we eventually will have to code these agreements in using smart contracts. And the interesting aspect is that nowadays a lot of people who are not lawyers are doing it too. So this kind of makes us wonder whether, how can we exactly separate the content from what was done by a legal person and that has actual expertise in the subject, or someone that is a layman from a legal perspective but has been writing stuff that has legal implications. Now, the smart contracts, and I'll go through a couple of examples, but before that, one of the interesting examples of a smart contract is how it can be used and has been explored by a lot of companies. IBM is one of them, but many more, is in the supply chain. So how smart contracts can be used by companies to improve their operational efficiency, reduce costs, reduce lead times. And one of those applications, for example, for a distribution company that needs to, just ship boxes and store them at a warehouse. If a smart contract is able to track the pathway of the goods, it can automatize a lot of tasks. So you can ensure that the company gets the money the moment the product is shipped and delivered at the client's door, and you can do this all automatically. And so, again, the smart contract is not doing something new. We already do this, but we do this with a lot more transactional costs. So this can bring a lot of efficiency. From the end user perspective, just to sum it up before I move on to some particular examples, but from an end user perspective, the most common use for a blockchain for smart contracts is, of course, currencies, in particular cryptocurrencies. You already know what can be done with these cryptocurrencies, but then there's also a lot of things that we can do using smart contract. I'll go a little bit more in detail, but it has to do with actually the public legal system, but it could be used for ownership, for identity, for knowing who owns a piece of land in a certain country, even for voting, although that particular thing kind of worries me a little bit. But despite that, I mean, there's still plenty of use cases. And then in terms of smart contracts, we'll go more into detail. And then finally, on top of that, like a collection of smart contracts, we then have the distributed autonomous organizations. And that brings us to the next level. At the moment, we don't have one good example of a DAO that makes the full use to its full potential of the technology, but eventually we'll have in the future, because these technologies take a while to catch up and to bring them to the fullest potential. Okay, so very briefly, some couple of use cases. I do have plenty of slides, but I had to, cut this short for all these sectors. But I'll focus in three actually: the public sector, the legal industry for obvious reasons, and also the energy. But before that, let me just do a product placement of something that I was involved in, which was basically a platform for syndicated buying. So the idea was here for different firms, different people to come together and purchase in bulk, right? Why? Because if you purchase more quantity, you have more bargaining power, and so this was a way to make it easy for companies to come together as a syndicate and purchase in bulk. This could be especially useful for governmental, for the state, but unfortunately, as you well know, public procurement was probably drafted by Kafka, so it's a hell. And dealing with that is extremely hard. But it could be definitely an interesting use case where the state could just, well, they do have some purchase central units, but still they're not very efficient in what they try to do. So still within the public sector, let me just show you what was the jump between 2017 and 2018. There were like 117 initiatives. In 2018, 22, and nowadays we have over 1,000 initiatives by governments in the public sector throughout the world. So I would say that countries are taking this technology very seriously. There are a lot of potential use cases: establishing identity, proving that someone is who they claim to be, personal records, land title registry. This is a big thing in a lot of countries where the governments have no idea whatsoever who owns a particular piece of land. So this could definitely help. Supply chain management, inventorying, public procurement, contract and vendor management, even voting. So there's plenty of use cases that are being explored right now as we speak. In terms of the legal industry, I would say that the part of the legal industry with the most potential to be fully digitalized is the work that notaries, I hope there is no notaries here today, but is the job that notaries mostly do, because they verify what is being done, and they witness and certify, right? And actually, we can do that through smart contracts. We can do precisely that, certify the authenticity, make sure that it was signed by the person that is supposed to be signing the contract, and these are extremely laborious and manual processes nowadays, and they can be automatized. One example is, for instance, this project called Block Notaric does precisely that. It doesn't cover the full range of things that notaries do, but already do a lot. And so this could be one way forward in the legal industry using smart contracts. Now, another use case in the energy sector, there's probably some of you have heard about it, the renewable energy communities. This is a big thing going on. So basically, in the past, we had decentralized energy production, say 200 years ago. Then we moved to centralized energy production, nuclear plants to hydropower, and now we're moving back again to decentralized energy production through photovoltaic panels and wind turbines and all that. And with that comes the potential of having local closed energy communities that can trade the energy between themselves without having to sell the energy to the network operator. And and of course that comes with big economic gains. So let me show you one example. In the traditional way, you have the central authority, let's say it's REN, and basically they're in charge of balancing the grid. And if you have some solar panels and you don't make use of all the energy you produce, you can sell it to the network, but they won't pay you much. Now, if you are able to form a closed community, you can sell to someone else. You can sell it at a price higher than the one you'd be selling to the network, but your neighbor will actually purchase it by a price lower than the price it would purchase from the network. And so this actually is beneficial for everyone. And there have been a lot of projects that, one of them I'm responsible for, that have been implemented using smart contracts, in the particular case Ethereum. One of the most known projects is Power Ledger. Another one is Energy Web. Energy Web is run by the biggest automobile companies in the world. They run it for free, so the transaction fees are extremely cheap. The project we're developing, we're basically developing a marketplace that allows for bilateral trades and for supporting these local energy communities. So hopefully until the end of the year we'll have one working at the Sonai. Sonai is building one local energy community in the north, in Maya, in some of their factories, and the platform running was developed by us, and it's running on Ethereum. This is based on smart contracts where they can basically sell and purchase energy in a much more dynamic and flexible way. So this was another use case, another example of how smart contracts can allow us to do things nowadays in a completely different way, more autonomous way, a more independent way. So finally some key takeaway messages. So although there are some dubious use cases, I agree, Bored Apes is probably one good example of that. Smart contracts are still a major breakthrough, and they will be fundamental in this new digital economy of the intangibles, right? If we think about it, the companies of today are companies that basically don't have no more physical capital. They basically have human capital. They have people and laptops. That's it, right? And if we think about most of the unicorns we have in Portugal, they share precisely that. They're basically composed of people, that's it. No big industries, no big exports, they're just people with ideas. And that's the economy of the present and also of the future. And the smart contracts are great technology for promoting this and for supporting this change, this shift to the digital economy. The second key takeaway is that although smart contracts are of course interesting for supporting cryptocurrencies, there's plenty more use cases that can be thought and implemented using smart contracts. They help to eliminate intermediaries, reduce transaction costs, facilitate dispute settlement, and increase transparency. Let me just add, that I haven't done it yet, they add a lot of complexity too. So when someone approaches us and asks us to develop something using a blockchain, I go through a very complex decision tree to make sure that they really need the technology. Because in terms of development effort, is much more complicated. It takes a lot more time developing using Web3 technologies than compared to traditional software systems. And finally, I think that, and this is a very important aspect, that we must be very mindful that when we're thinking about legislation, about regulation, we all understand that we should protect customers for sure, but we should not hamper innovation. And there's a lot of innovation behind all this, a lot of good things being done. Of course, a lot of scamming too, a lot of people that try to exploit others, but that also exists with other legal tenders other than cryptocurrencies. And so I do hope that we should put the public interest first and be mindful and careful with some vested interests that will of course try to block this kind of innovation, because it will challenge the incumbents in a lot of different markets. And so those are the main key takeaway messages. Thank you so much for your time. Thank you.